Um, we're part of Huobi Research, where we're a global think tank aiming to take a deep dive into a number of different crypto topics on a weekly basis. So be sure to follow us as usual at Huobi_research on Twitter or huobiresearch.medium.com, where we have a number of different reports. And today we actually have a special guest as well, who will be later on diving into his report. So as usual, be sure to leave all your questions in the channel and we'll get through to them at the very end. And just to note, as usual, that everything said here is not investment advice and does not represent the opinion of Huobi or Huobi Research, and it's that of our own personal opinion. So with that said, let's kick it off with this week's topics, right? So, last week was, I would say, a very volatile week overall for macro and crypto, especially crypto. Even into last weekend, right? So for this week, we'll be diving into last week's Fed meeting and the persistence of inflation, and talk about now that we have a clear view of the crypto market contagion overall. And then after that, we'll be diving into some NFT topics as usual, just to give everyone a taste of something, I guess, slightly more positive potentially. So with that said, just to give an update on market numbers, so Bitcoin is trading around 21K right now, having stabilized over last week. So last week was around trading around 22K. I think over the weekend it fell down to a low of 17.5. Same with ETH. Right now it's stabilized at around 1.15K. And in traditional markets, we've also seen a stabilization over the last few days after, I guess, the market has now digested the news of the Fed. Futures are looking up right now with S&P at trading about up 1.5% at the moment. So with that said, for this week, like we mentioned just previously, we'll have a special guest who is our colleague, Dave. So recently he just published a report talking about FUD. I'm pretty sure, as everyone's aware, in crypto, FUD means fear, uncertainty, and doubt. And right now, it's a great topic because of the fact that I think everyone's wondering, is, the market is going to keep crashing, or potentially will there be a relief rally? So with that said, Dave, take it away.
Yeah, thanks, Chad. I think you introduced it very well. So now we're gonna have a quick chat on how like these pain levels and stuff are going to be talked about. So in this article, what I try to do is to provide a quantitative tool to sort of solve the problem of where is the bomb, but sort of like no investment advice. In this article, if you hyperlink the URL, so there is a pain level indicator. So in this pain level indicator, what I was trying to do is to measure how painful most market players are feeling. So if like I know this is how market works, so like a bit of brutal, but when most people give up, like Warren Buffett said, you buy when people are fearful, buy when people fear, or buy when there is blood on the street. So how to, like measure like how much blood or how much fear on the market. So I just assess it with the pain level indicator. In this indicator, I divided that into 4 categories. So the first category is to that, the pain level is equal to the top market capitalization minus, like the price, times the multiply, with the circulating supply. So a bit of, technical here is like, how do you measure the intensity of people looking at the price? So the people are feeling, that they are being hunted by or feeling like bad about looking at the price, that the price is lower than what they bought. And the second factor is like the Bitcoin amount in loss over divided by the circulating supply. So we will know how much or how many people are feeling, or how many Bitcoin holders are feeling they're in loss and they're feeling depressed. The third factor is like the address balance over 0.1 Bitcoin over address balance over 0.01 Bitcoin. So in that factor, we will assess how many serious players are participating in the game or are feeling like serious players are more willing to buy more than 0.1 Bitcoin than 0.01 Bitcoin. And the last one is like donor flow. So you can look at the chart or look at article, talk about what is destroyed market capitalization. Basically it's like Conde's destroying stuff. In figure 5 and stuff, you look at ping level indicators, with different lines. So the second indicator, apart from the ping level indicator, is about net profit and loss. So why do I have to make the realized profit and loss combined or plus the unrealized profit and loss? Because we have to know what is going to be lost in the market and what was lost in the market. So we'll know how much profit and loss average people are making. So it goes down like in figure 8 and stuff. So we'll probably see a bottom there, but no investment advice. In the last indicator we talk about in the article is like rare accumulation. So we'll see that the amount that or the wallet address that is holding more than 10K worth of Bitcoin, they're accumulating. So probably like a reverse indicator for the market. So people are gonna have look at it and find a strategy for themselves. But my advice is to know your own risk. To quantify your risk portfolio before making any sort of like investment strategies. No investment advice though. Yeah, thanks.
Yep, thanks, Dave. Yeah, so I guess this report really helps, I guess, right now because of the fact that, just to summarize what Dave kind of said, I think right now, because of the fact that a lot of what you're seeing in the market is a lot of forced selling situations. I think we talked about it briefly last week, where there are some players in the market right now where they don't have a choice, right? They're forced to sell because of the fact that they have certain debt obligations or outstandings that they have to meet, and in order to actually make whole for those obligations, they have to sell. And this type of event is known as kind of capitulation, where in these times, people that even though they want to hold, they cannot because of the fact that they the market kind of forces their hand. And from understanding this and assessing other people that have also kind of taking this this price action as kind of guidance in terms of what they should be doing and selling and being fearful, I think it provides a very potentially strong counter trend or counter price movement indication on what potentially a longer term investor should potentially be doing. But of course, not investment advice, and definitely leverage and taking positions right now in this volatility is not for the faint of heart. So definitely be well aware of that. So with that said, let's move on. Okay, so yeah, so this week's main first topic is last week's Fed meeting rate hike, right? So by now everyone's well aware that the Fed has raised interest rates by 0.75 basis points, so which is the largest increase since 1994, right? And the main reason behind the fact that they raised so significantly is because of the fact that inflation, the inflation CPI print that we talked about last week, came in above expectations, right? So that goes to show you how persistent and sticky the inflation has been, especially in the U.S., right? And because of the fact that the Federal Reserve has, as part of one of its mandate, in terms of making sure of price stability and having a pseudo kind of inflation target of 2%, given the fact that previously their stance was more on the transitory side, I think now we've seen that inflation has kind of persisted and remained, and that is why I think last week we saw the largest rate hike in one Fed meeting since 1994, right? And another point to note was the fact that even though CPI has printed such a strong number, if you look at a chart on the right? So the blue line is CPI, the red line is the unemployment rate. You can see that after this really big spike in unemployment due to COVID, unemployment right now is at almost all-time lows at around I think 3.1%. So because of that, the Fed feels like there's a lot of room potentially for them to further tighten because given the labor market remains to be strong, and the fact that inflation remains to be hot, right? For them, I think right now they see that they have no other choice than to further pursue the rate hikes, even though it has really taken a toll on the markets. Because right now for them, I mean, the markets is not the main priority, to say the least, and clamping down on inflation because of the fact that I think given previous episodes in prior decades, runaway inflation is the main concern for the Fed, and that's why price stability right now is a key focus, right?
Yeah. So the ultimate goal of the Fed is to bring inflation down to 2%. And so at 8.6% CPI in May, I think that we will still have a long way ahead before the Fed stop raising rates. And historically, when inflation has risen above 8%, it has taken years, not months, for inflation to go down. And I think as long as the war in Ukraine and Russia continues, there will still be concerned about rising energy prices, especially in gas and oil. So yeah,
yeah. No, for sure. I think to further add on your comments, Hanson, right? I think the main issue is right now the main driver of inflation is energy costs, right? Especially as well as food inflation, given the fact that Ukraine was such a big piece of the global food supply, right? As everyone has now been made well aware of, right? So because of these two factors, right, these are inputs, right? Where you can't from a Federal Reserve or a central bank standpoint, they can't really control the supply side of the equation. So instead, what they're doing with tightening financial conditions and increasing the interest rate is they're trying to basically taper demand, right? So by end of the day, with an economy, supply and demand, right? So if they're unable to increase supply to meet this current demand, basically the other way around it is to cause demand to decrease. And unfortunately, I think right now the Fed is kind of boxed in where they feel like they have to aggressively further increase interest rates, which by an extension tightens financial conditions, in addition to the fact that they're now at the start of this month they started a quantitative tightening. So by draining out liquidity out of the financial system, what they're doing is they're making it harder for a lot of companies to potentially complete refinancings and basically borrow and lend, right? So as a result of that, this trickles down further because of the fact that the interest rate is also pegged to consumer loan demand, et cetera, where because of the fact that the lending is not there, from a I would say economic theory standpoint, technically that should cause companies to slow down hiring, and produce less, and basically people will consume less, and et cetera, leading to the fact that potentially a recession. There's no better way, I guess, to skirt around the issue. Basically, from the looks of it, the Fed wants to create a soft landing, so to speak, a soft landing in a sense where creating a mild recession would really help in lowering the current demands for energy, especially given the fact that in the US we're at the peak of driving season where gasoline and oil demand is at its peak, right? So the aim is to hopefully kind of reduce that demand as we head into the fall.
Yeah.
So moving on. So as everyone's well aware by now, I think Demarcus took a significant beating over the last week or two, and last week we were still during our weekly crypto chat, we were still trying to figure out the pieces. There were rumors flying here and there, and basically over these last few days, it's been confirmed that one of the top crypto hedge funds, Three Arrows Capital, which the peak was estimated to have a asset under management size of 18 billion. They were unable to meet a number of different margin calls related to their positioning in the market. And as a result, that's why I think we saw that significant leg down from 27.5K all the way down to the 22Ks last week. It was very orderly in terms of selling wise, and as a result, because of the fact that they were unable to meet a number of these debt obligations that we did mention earlier in this chat today, the market forced its hand, right? So by forcing Three Arrows' hand, they were forced to unwind and sell off a number of different projects that they were tied to. So we've kind of highlighted the number of projects that they have exposure to from a VC investment standpoint that we've kind of captured here in these two tables and charts. And it just goes to show you how significant that ripple effect is. Because if you think about it, right, the market was already going down, but because of the fact that Three Arrows pledged a number of these tokens. So what pledging means is, in a scenario where they use these tokens as collateral to borrow money in the bull market, I'm pretty sure they reinvested that money into buying more crypto assets in general. So now, because of the fact that the crypto market is now going into a decline, they have to unwind that position, right? So by unwinding that position, because the crypto tokens that they bought probably went down in price, they have less money to repay the creditors that they owe money to. So because of the fact that they have less money, they have to sell more collateral, they have to sell more tokens, other projects, et cetera, to raise financing and raise cash and raise funds to basically mitigate this. I think right now, based on all the chat over Twitter and just the news media. Right now, I think a lot of the positions with a significant number of institutions and exchanges have actually been liquidated. So what that means, in a liquidation scenario, there is a potential chance for the exchange to lose money because of the fact that when you get liquidated, the exchange basically has to sell off your position. But the problem is if the price movement moves too fast for the exchange to sell off your position to net out the money that you owe to them, the exchange actually comes out with a loss, right? So this is what I think happened with a lot of the counterparties associated with the Three Arrows. So let's move on to the next slide. So yeah, so one of these counterparties is BlockFi, right? So prior to even the Three Arrows situation, BlockFi was already facing a number of issues on its end. And this is mainly due to the fact that, right now, BlockFi, the main, I would say, product suite for BlockFi is, lending and, staking, right? But the problem is, apparently through some of the leaked documents that was, shown around Twitter was the fact that over the last 2 years in the bull cycle, they actually lost, I think, a few $100 million in annualized losses over the last 2 years, which is crazy if you think about it, right? Like me as a crypto institution and liquidity provider into the space actually lost money during the bull run, right? I mean, a lot of people made a lot of money throughout this whole period, and for an institution to be losing over 285 million in the past 2 years, that is just astounding. And because of the fact that Three Arrows also were one of the main counterparties with BlockFi, BlockFi announced that they actually liquidated Three Arrows. And because of these number of issues where even though in a bull market you provide this staking platform for people to access and you're still losing money, what had happened was the fact that because of this, BlockFi was undergoing a cash crunch where they were trying to raise financing over the last few weeks, right? So BlockFi, I think earlier last year or last fall, they raised $400 million at a valuation of $5 billion. So last fall was 9 months ago. Right now, over the last few weeks, they're now trying to just raise, I think, 100 million at a $1 billion valuation. So 80% markdown which is usually not seen in VC fundraising because of the fact that usually VCs mark up the valuations of their investments round by round, as opposed to the other way down. And it really takes a really bad situation for this type of event to happen. So BlockFi is under a lot of significant stress right now. And for anyone, I would highly caution right now, if you have money stuck or potentially on BlockFi or a number of different centralized lending these lending platforms, definitely move them off to a cold wallet or some decentralized online wallet, because a number of these applications and institutions have actually paused withdrawal, right? So not to cause any panic, but definitely be on the lookout for that. And just to give a quick update, I think I just read before we jumped in onto this chat that BlockFi actually secured 250 million in a revolving credit facility from FTX as like a lifeline right now, so to speak. So right now they still have, I would say, liquidity to kind of survive right now. But again, given the fact that we're in very volatile times, for I would say the average user, definitely be on the lookout and be aware of the fact that if down the line things turn to worse, potentially there might be a situation where they might also halt withdrawals, as we have seen with some other of these centralized crypto firms as well. So definitely be on the lookout for that. Okay, so moving on, right? So what other parts of the market was affected by this contagion? So we touched upon just recently about BlockFi and some centralized crypto parties. So definitely for market contagion, it won't just be isolated on centralized parties, counterparties. And what we've seen with a lending protocol on Solana, Solan, was the fact that there was I think $180 million margin loan position that was very close to being liquidated on chain, right? So this is a on-chain lending protocol. And because of that, what had happened was Solan and the founding team proposed a governance vote to basically mitigate this risk from this one account that has 180 million borrowed on this platform, and figure out how to best liquidate or sell off their exposure to not cause a significant ripple effect in the crypto markets, especially on Solana. But the main issue is, if you think about it, right, one of the most, I would say, advantageous or the best pros towards using a decentralized application is the fact that it is not able to undergo some centralized force dictating what you can and cannot do, right? Basically, if you have the funds and you want to borrow, you're able to, right? There are no rules preventing you from borrowing compared to centralized banks or whatever, where basically you have to go through KYC and a credit review process to make sure that you fit the bill, right? Decentralized lending, the main purpose is to, as long as you have the funds to over collateralize your position, you are able to borrow the money, right? And that is kind of going against the ethos of DeFi in this situation, because of the fact that the team wants to take a vote and basically ensure that they be potentially granted emergency powers to liquidate this potential risk into project. I mean, eventually, so to give an update on the situation, eventually, after this vote went through, which is pretty ridiculous, there was a second vote that basically voted back against it. So, I think this kind of highlights how infant or how early we are in terms of the DAO governance structure, right? Because if you think about it, if I just voted one way for one thing, and then I could have a vote 6 hours later to vote against another thing, it kind of defeats the whole purpose of the fact that, like, what's the point of doing all this type of voting if I can always just retroactively unvote a previous vote that went in, right? So I think this is the main issue right now, because crypto has never seen such a a large catastrophe, right, so to speak. And everyone's like right now figuring out what they can actually do and not do. And this is one of the conversations that are to be had, right? So just to post a funny meme that I saw on Twitter, basically someone was making fun of the whole situation about the fact that protocol governance explained, right? I do a snapshot vote of which color the Lambo for the founder should be buying. Initially 89% of people voted black, but then the founder was like yellow, and then he re-raised the vote, and 96% of people voted yellow, right? So it kind of makes fun of the situation of the fact that if DAO governance and all this type of voting can be always retroactively canceled, then what's the point, right? What's the point of doing all this type of voting and trying to move towards a better potential system compared to centralized decision-making authorities, right? So I think that is the main takeaway from this incident. And definitely, end of the day, instead of granting Solana Labs or the founding team executive powers, potentially what might be a better consideration is like, are the understanding whether or not the initial incentives are even aligned, right? Like, so in the first place, to mitigate potentially such a large forward from even being established, are there other mechanisms or parameters that can be set on the protocol level in the first place to avoid and mitigate this? And if not, then I guess the problem is if you always intended for large players to borrow a significant amount of money, then the risk of mitigation should be clearly understood, and models and test cases should be done and understood on whether or not the project and the liquidation model and the liquidation bot works and functions in a orderly way such that it doesn't disrupt the market significantly. End of the day, any type of liquidation always disrupts the market, but in the case of Solana, it seems like potentially if the liquidation did go through, it will cause a significant amount of pain for a lot of people. So I think that is probably my main takeaway from that situation.
Yeah.
Henson, do you have any point?
Yeah. So another problem that this incident has highlighted was the fairness of this the DAO governance structure. So if I remember correctly, during the first proposal, there was a large DAO token holder who at the end accounted for 90% of the vote. So basically, other people's vote was actually I think was actually how do I say it, unnecessary or useless.
Yeah, so yeah, I think what you're trying to say is basically because of the fact that the voting power is weighted by the number of tokens, you are over allocating the powers of voting towards the largest whales and owners of the protocol, as opposed to thinking about the greater good, right? I mean the greater good of all users, right? Not just the power and big users, so to speak.
Yeah, and the proposal I think only lasted for 6 hours, so many people in the community didn't get the chance to vote. So I think in the future there should be like a standardized a DAO proposal time period. Moreover, there should be like some a cap on how much voting power an account can have in doing this kind of DAO governance proposals.
Yeah, so just to note on this, I mean, so I participated in a few DAO votings myself. Usually, in terms of best practice, there's like a 3-day period quorum where people are actually able to raise and comment and discuss. However, I guess in this situation, maybe it's because of the fact that it's a very tight situation where they feel like, okay, Solana's price I think back then was in the mid-20s. The liquidation point was at 22, so it was very tight. But I guess end of the day, similar to what you talked about, right? Why is this even potentially a vote to begin with? Like, isn't the project working as it's supposed to be in terms of actually liquidating the user if the price hits, right? I mean, so taking, executive powers, basically, again, like I mentioned earlier, is an antithesis and the complete opposite of the ethos of DeFi, right? If we wanted a centralized entity to take over and make this executive decision on what to do, what's the point of DeFi? Why don't we just use a centralized party like BlockFi or Three Arrows, right? I mean, we already see the same issues and same problems that manifested when a centralized entity potentially takes on too much risk, right? So for a decentralized platform, better parameters potentially in terms of figure out how to align the incentives of the user and the protocol itself might potentially be better. Maybe you raise the margin requirements, you raise the interest rates that they have to pay, you enforce a certain amount of debt repayment, and program it in if they basically have the debt outstanding for a certain period of time. I mean, there are many ways that you potentially figure out how to make this a more orderly liquidation or handle the situation, I think. And definitely this was probably not well thought of in the first place, and that's why I think this when potentially the founders were scrambling. And I don't disagree with the fact that right now, if it was a very tight situation, that they were probably panicking. But at the same time, it does go against the ethos of DeFi. So moving on, right? So I mean, in addition, jumping back, I guess, from DeFi, going back to CeFi, right? So another update on, I'm pretty sure everyone's well aware of now. We talked about this last week for Celtius, where there were so many rumors from Celtius, right? Where they were actually misappropriating user funds to trade a number of different tokens and take leverage positions and lost a significant amount of money. And basically, as a result of that, they've implemented previously, I think it was a few weeks ago, a withdrawal freeze. And now regulators are now, in 5 states in the US are targeting them, right? And then we just saw a similar situation with Babel Finance where they've just halted withdrawals, right? With the Snap of Fingers, they were, they halted withdrawals and basically cited unusual liquidity pressures, right? Which kind of just goes to tell me, like, they probably, again, misappropriated potential client funds and probably did some, degenerate, trading with it. Or else, if the funds were, well, custodial and, appropriated in the right manner in terms of, staking protocols or whatnot, this potentially won't happen, right? And I think this really highlights the key risk with a lot of these centralized crypto entities, right? Where there's a lot of opaqueness, a lot of unknowns about how the funds are actually, I think, used and misused potentially once the user deposited these funds into these entities, right? And I think this is not dissimilar to the fact that if you think about for people that are not aware, back in 2017, in the previous cycle, right, for Bitcoin, right, a number of these smaller exchanges just disappeared, right? The CEO, I think the most famous one was Quadriga in Canada, where the CEO just ran off with funds, right? And apparently everyone that was depositing money to buy Bitcoin actually didn't own any Bitcoin, and it was a Ponzi scheme, right? So basically the founder was just filling in orders as they go, and then he was degenerately gambling all of the funds away, and eventually lost, I think, a significant amount of portion of the fund and decided to run away. And it was during the whole entire bull market where Bitcoin went from 1,000 to 19K, right? Which is astounding and crazy. So I think, again, we're kind of seeing, again, unfortunately, history, doesn't repeat, but it rhymes, where we're seeing a number of these centralized entities, taking a lot of liberty with client funds because of the fact that regulation is not around. And, these centralized parties having so much, users, people depositing funds, basically took significant bets. And clearly this downturn has caught a lot of people off guard, right? From the move from the 30s down to 20, I think a lot of people did not anticipate this. And especially given the fact that we saw 3 arrows blow up, right? A lot of people did not anticipate this. So because of that, we're now seeing the ramifications of a lot of bad trading gone wrong. And that's why right now you're seeing Babel, trying to raise financing. I think they recently secured some emergency financing as well. Celtius doing the same thing. I mean, everyone's doing the same thing because of the fact that they have to plug the hole. And if they're unable to plug that hole that they lost, then the users are going to go after them, and there will be a number of lawsuits already emerging, and will further emerge because of the fact that these funds are not very clear and identified and appropriated appropriately, right? And I think heading forward, this really highlights, right? There are only certain institutions that you can really, I would say, trust, first of all, with your funds. And second of all, it's best to always diversify your funds across a number of different exchanges. End of the day, right? Crypto is about decentralization, right? Not just by, holding everything on a DeFi wallet, so to speak, or a MetaMask wallet, but also decentralizing your holdings across a number of different exchanges, such that even if one were to blow up, you will still have a number of your funds to access in different exchanges, which might not have the same risk, right? So I think this really highlights the fact that, end of the day, not your keys, potentially not your coins, as well as that always do your due diligence on these entities. Just because they're big in crypto doesn't mean they cannot fail. And we have seen clear as day in this cycle that 3AC, Celtius, Babel, BlockFi, all these are now facing a number of different issues. And as a user, crypto user, definitely be well aware and assess all those risks appropriately. Don't go for the yield. I would say right now, especially in this market environment, don't go for that 10% APY. It's just not worth it, right? In terms of having potentially your funds not being able to be withdrawn, right? I think losing the principal over a 10% gain over a year is really not worth it right now. So definitely be well aware. But Hesa, do you have any opinion on this?
Yeah, so I have a quick update about Celtius liquidation risk. So at the moment, Celtius currently holds 24,000 BTC in collateral. So it has a collateralization ratio of 200%, and with a liquidation price at 13,000. So at this level of at the current Bitcoin price right now, there is there's not a very big risk of Celtius getting liquidated on its BTC position. So if we see Bitcoin dropping below 15,000 and reaching 13,000, Celtius might get liquidated, and we will possibly see Bitcoin dropping further down more. And yeah. So
okay, so moving on, NFTs.
So moving on to the NFT market, the NFT market in general continued to fall in the past 7 days. So looking at the year-to-date change in USD for the NFT 500 index, we are at minus 76%. But it is not all doom and gloom for NFTs. So looking at the chart on the right, we are seeing a small rebound for the large cap blue chip projects. So the collections leading the rebound are Doodles, which rose 60% in the last 7 days, and CryptoPunks, which rose 42% in the last 7 days. So I believe the main reason behind this rebound is the NFT NYC event that is taking place this week. So traders are buying in before the event in anticipation of major announcements from these large popular NFT projects. So at the moment, you should be extra cautious right now because you are buying a short-term peak for NFTs. So you should be ready for a sell the news event after the announcements that happened during the NFT NYC event. So in last week's episode, we mentioned about how NFT prices are affected by the volatilities of Ethereum and the potential of having fiat priced NFTs. So let's take a look at how Crypto.com's fiat NFT place is doing. And in the last 30 days, we're seeing the majority of most traded collections on Crypto.com dropping by 30 to 40+% in floor price. This might seem like a lot, but overall, they're still their price flow are still outperforming Ethereum prices, Ethereum priced NFTs by a large amount in terms of USD. So, for example, looking at the Bored Ape Yacht Club floor price, although its floor price in Ethereum has only dropped around -5% in the last 30 days, its real USD value have actually dropped more than 50% because of the price action regarding Ethereum. And I just mentioned that there's a 40% increase in the price for punks. It is driven by some positive news by Yoga Labs. So CryptoPunk's IP was acquired by Yoga Labs a few months ago, and they have finally announced some plans regarding the future of the CryptoPunk's IP. So they hired Noah as the brand lead for CryptoPunks. So if you don't know who Noah is, he's the resident NFT expert for the famous auction house Christie's, and he's known for bringing in Beeple's first 5,000 days NFT art into the auction house, which sold for 69 million USD. And looking at the recent price action of the CryptoPunks collection, it has reflected that the CryptoPunks community and its holders are in generally feeling bullish about Noah joining Yoga Labs and becoming their brand league. So the floor price now for a punk is around 70 ETH. And moreover, if you look at the chart on the left, we are also seeing lowest levels of total listed punks on the market. So this actually means a lot, since that the punks market works slightly different than OpenSea, because in OpenSea there's an expiration date for any listings you make, but on the punks market you actually have to pay gas to cancel your listing. So this is another bullish signal that for punks. And one negative event news that related to this CryptoPunks announcement is the suspicious trading activity of punks before the Yoga Labs official announcement of Noah becoming its brand league. So one day before the announcement, there had been 100+ punk trades happening, which accounted for 8,000 plus Ethereum volume. So this obviously is a very obvious insider trading behavior, because for the last month, daily punk sales usually ranges between 10 to 20 per day. And I think this kind of insider trading activity is definitely unacceptable and unhealthy for the NFT market space in general. So it has always been a gray area in terms of law because NFTs are not considered as securities. But I think it's Yuga Labs' best interest to control insider information and conduct due diligence within their team to make sure that no insider information get leaked. So given that the floor price of punks have rose so much in the last week, is that a good time to buy crypto punks now? So if we zoom out a bit, looking at the USD floor price on the right, the current value of punks is still relatively low compared to the past 3 months. So it is currently still trading at price levels in terms of USD before the August NFT bull market and the January bull market. So in my opinion, if you are looking to buy into CryptoPunks, in the current price level is still considered cheap in the long history of CryptoPunks. And for me, owning a CryptoPunks NFT is like owning a piece of history, since that it is the first ever generative profile pic NFT. So and due to its historical value, the execution risk involved for the future of the CryptoPunks is relatively low for Yuga Labs. So yeah, so Jet, if you can choose, would you choose to buy Bored Apes NFT or CryptoPunks NFT?
Yeah, I mean, I guess for me personally, if I had to choose one, I'll probably still stick to the apes. Even though I understand, CryptoPunks and its historical significance, I think given the fact that CryptoPunks was acquired by Yuga Labs and the main IP entity and the main IP for Yuga Labs that they're developing is related to Bored Apes. I think even though they've kind of hired a new creative director, to kind of spearhead all this for CryptoPunks, I think the main focus for them as a franchise, as a company as a whole, still remains on the Bored Ape side. So for me personally, I'm probably get a Bored Ape. So
okay. So moving on to Candydrop. So as usual, we will remind you guys about the Candydrop event.
So just to cut you off quickly, before that, again, be sure to leave us any questions that you have in the chat, and we'll get to them after this.
Yeah. So to participate in the Candydrop event, users with an average spot trading volume above 100 USDT of any digital assets for the last 3 days can register, and participants can win up to 100 USDT per entry and up to 1,500 USDT per week. So the more trading volume you have, the more entries you can register for, and the higher your chances of winning is. And we will also airdrop a Candydrop double up coupon to participants who did not win anything. And using the coupon will double up your chances to win the Candydrop, and you can stack them up to a winning chance of 100%. So, and moreover, for each Candydrop event, one lucky star will be selected to win a grand prize of 1,000 USDT. So for more information, you can go on to the Huobi app and click on the new listing event page for for learning about the Candydrop event.
Okay. Yeah, so I guess just to recap, while we wait for some other questions to fill in. I mean, right now, if you ask me, again, I guess the title of our, crypto chat today is, buy the dip or sell the rip. I think, personally speaking, I think right now what we're seeing is a relief rally, given the fact that we've seen such significant amount of sell pressure over the last week or two. Definitely, right now, I think this is where I think a lot of fundamental buyers might see potentially that crypto and Bitcoin as a whole is now at a potential attractive valuation. So that's why I think we've seen a balance, which has also correlated with traditional markets right now. But heading forward, I think right now the key issue still remains, right? Right now, we have just started quantitative tightening from a macro perspective, where the financial conditions are deteriorating because the liquidity is being drained out of the entire financial system. So because of that, usually in these circumstances, crypto as a whole does not do as well. We've seen that previously in previous cycles where the Fed also did, QT back in late 2018, where during that time when they were reducing the balance sheet, as they are just starting right now, crypto basically saw it go from I think 6K to 3K, basically to 6K at the very bottom, right? So that was basically that marked the bottom. And it was crypto winter for a good 6 to 8 months, I think, back then. So definitely be well aware of the risk this time around because of the fact that right now, as we explained earlier during this call, the market is, the Fed is not pivoting yet because of the fact that inflation remains high, unemployment remains low. So until there are, signs where the market is starting to see more recession-like signals, I'm personally gonna be staying away from trying to go too aggressive in terms of trading this market environment right now. So for me personally, right now, maybe you can buy the dip for the next week or two, but definitely be well aware of selling the rip shortly after that. So let's take a look at the questions. So I think there's a question about Henson to you. How do you know how to value an NFT?
I don't think there's any way, any use for any functioning model that you can accurately value an NFT. So for me, if I'm looking at NFT to buy, I would definitely look at the how active the community of the NFT is, and how much how innovative the NFT collection is. So for punks, that they are the first ever generative profile pic collection, and for Bored Apes, they are the first ever NFT collection that has a social club utility in it. So these two are the I think the innovative NFT collections that are the first of its kind. So I think innovation is definitely an important factor to look into when you are evaluating NFTs.
Yeah, so I guess for my personal take, I'll probably take a slightly more nuanced approach in terms of valuing an NFT. I think in general, you can probably bucket the current set of NFTs in two categories, right? So the first category is similar to what Hassan mentioned, is the profile picture type of NFTs. And then the second part is more GameFi, right? GameFi NFTs, where I think if you are buying NFTs in more of a GameFi setting, there's a easier, I would say, model to attach a valuation to it because of the fact that within the game itself, and the game ecosystem. How does the NFT generate value, right? So for example, if I buy a land NFT, right, I'm randomly given XYZ amount of crop yield potentially from this land NFT, then I'm able to, estimate based on the current token price or the estimated token price that I think this project will go to and the rewards I will get, potentially how much money I might make in a bull case, a bear case, and a normal case, I would say. And then from there, you're able to, back out a, estimation on what might be an appropriate value for these type of NFTs for land NFTs or other gaming assets, right? Like for example, like gaming characters or gaming equipment, et cetera, right? So I think this is probably a nuanced way to look at GameFi NFT assets. And from a profile picture standpoint, I definitely building on top of what Hanson said, right? If you think about profile picture NFTs, definitely there's a few factors, right? I think understanding the community and the reach, right? Because at the end of the day, for profile picture, it's about the network effect of who's actually owning what, right? So it's kind of, I think some people in the crypto space have kind of called profile picture or very popular profile picture NFTs velvet goods, right? So velvet goods are basically goods that people want to have because they see other famous people have it, right? So the only reason why they're expensive is because other people, other famous rich people also have it, and because of that, you might want to buy one. So from that standpoint, it's definitely a lot more subjective in assessing whether or not you think one NFT collection will be being uptake and adopted by the mainstream or the cultural niche that you're potentially eyeing. And definitely from a valuation standpoint, this speculative premium is a lot more based on the target segment, right, of the people that you're trading at. So for example, like for Bored Apes, right, because of the fact that we've seen so many celebrities adopt it in such a short period of time, do I think in the next 12 months, Bored Apes will probably trade, at a significant premium relative to other profile picture series? Yes, I definitely think so, because I think it is now ingrained within, the culture, the mainstream culture, right? For NFT series that are not that level and are trying to penetrate it, from that standpoint, on a relative basis, then if I was just thinking about valuing and potentially buying an NFT, I would have to take up a certain percentage discount on what I think the probability of them breaking into that culture might be, right? So for example, like Azuki or Doodles or whatever, right? They have their own following, but what is the probability that I might assign it that will break up to the upper echelons of making it up, and if not, or maybe never making up there, right? So based on that, I'm able to, I guess, back out what I'm potentially willing to pay, and from there, kind of make that more qualitative or subjective assessment in terms of valuing profile pictures. So that's just my personal take. I personally don't trade as much on the profile picture side of NFTs, and I'm more focused on the GameFi because, again, like I said, things are usually more measurable because of the fact that GameFi NFTs usually give you airdrop of tokens. There's a utility towards playing the game, and hopefully, because of that, I see it more as kind of investing in a game, which has users potentially and adoption down the road, as opposed to profile picture, which is a lot more nuanced and reliant on the fact that you're able to assess whether or not a series is able to penetrate mainstream media and the culture significantly, and if not, are you able to buy it earlier enough to such that you're able to, I guess, sell it to or flip it to a different person? For me, that game is more zero sum because of the fact that right now in this type of market environment, there's a lot less people that are willing to just degenerately trade NFTs and try to sell it to the next buyer because of the fact that there's a lot less buyers right now because everyone's again pretty hurt from this market downturn and this last few weeks in the crash. for crypto. So I think definitely be well aware of that. So with that said, has there any last thoughts?
Yeah, I've nothing to add.
Okay, so again, thank you everyone for taking the time today to join us here at Huobi Research in our weekly crypto chat. Again, as usual, be sure to follow us on Twitter at Huobi_research, or definitely take a look at the number of different articles that we have on Medium. So huobiresearch.medium.com, where we have fantastic pieces from guests like Dave, analyzing different type of sentiment and different types of projects, et cetera, and trying to give you kind of the best insights that our team is able to deliver. So with that said, thank you everyone for taking the time today, and we'll see you guys again next week.